Hello, friends. Welcome to this very special series that we are starting, Momentum Misfits. We're going to talk about stocks that don't fit in our momentum strategies, stocks with the lowest momentum scores. And we're going to do this on a weekly basis to try and make you aware about how to select stocks in your investment portfolios, how to remove stocks which don't have the requisite momentum score, and improve the overall health of your portfolios. That is the whole aim of the awareness and the execution that you can do at your end basis this. And we have some tools that we will discuss towards the end of this video. So the let's start with momentum misfits. Today is 12th of January. So the idea on this series is something that you must understand. The whole concept is that we must stay away from weak stocks. That is the entire thesis of momentum investing, where we stay with the winners and we stay away from losers. That is as simple as it gets. So you stay with the strength and you remove the weakness. Know when to exit a stock is very, very important. And even if the entire market as a structure is falling down, even there staying with the strongest of that entire cohort is sort of the importance to bring to your portfolio. So what does this activity help you do? It tremendously helps you to forgo the pain of regret. Why didn't I sell there? Why didn't I buy there? Why didn't I buy more? Why didn't I sell more? All those kind of regrets that the market gives you in anything that you do on an ad hoc basis or on a discretionary basis, you will get a regret. And I've done several videos on regret emotion. You can watch those and see that it's only structured and rule based investing that gets you out of regret, because you remove the you in the equation with a strategy, and you don't blame yourself then for the decisions that you make. You basically are attributing that to the strategy. So the pain of huge losses are a part of the market. So nobody can really get away from losses, but you can get away from huge losses. You can get away from situations where you're not able to come out from. That is the key. Everybody will have profitable stocks and loss-making stocks. But how quickly are you able to get out of loss-making stocks is the key in terms of having a good health of your portfolio. Underperforming stocks, there could be stocks which are very good, extremely good quality names. Over a very long period they will do very well, but you don't know when they will perform, right? Maybe a stock is there which is a fantastic stock, but for the next 7 years it is not going to move. Are you willing to hold it? Are you willing to let go of the opportunity cost of your capital? Because at the end of that 7 years, you don't know it will perform or not. It may not. There may be a disruption in the industry. There may be some other company may take a market share. Maybe the promoter does something that doesn't leave him in the quality bracket. So all kinds of things can happen in the market, and you cannot just wait on hope to see what the future may be for your portfolio. So benefits of momentum are endless, and incorporating momentum helps you in a lot of ways. A lot of fund managers incorporate momentum in their strategies. They may not publicly say so, but momentum is the key reason why the market moves the way it does. So now let's take the example of Adani Enterprise here. So this was a stock from 2008 till 2018, used to range between 10 rupees and 70 odd rupees. So many swings amongst that. And then there was a move, and this is a logarithmic chart, by the way. So the y-axis is not a linear axis. You can see it's a geometric one. So you can see that from the 70 rupees in 2018-19, it straight away went to 3500, right? And there was one blip here in 2020, the COVID blip, and then it went to 35, 36, 3700, whatever number was there. And then it just collapsed, and there was a recovery, but then it never came back up to that kind of a trend. So these are the kind of moves that you don't want to miss. These are once in lifetime moves in some stocks. You don't want to miss that, right? Very strong momentum. Even if at that point of time everybody was baffled why the stock is moving so much. Why should it be valued at whatever it was being valued at? Uh, Maybe PE multiples were some crazy three digits, or whether there was any earnings or not at that time, I don't know. But these are the kind of moves you don't want to miss. And I can tell you with almost a certainty that people who missed selling out here, 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 here would have sold out here. They would not have had the courage to sit through this rise, because they have seen 10 years of this. That is how the human psychology works, and stock markets are a psychology game, whether you believe it or not. So you ride the trend and you exit swiftly whenever momentum fades, and you move to the next opportunity. That is how you basically keep rotating your capital from one strength pocket to another strength pocket. There is no love and affection, there is no marriage happening with any stock, that I have to die with this stock in my hand 50 years later. You don't have to do that, right? So the agenda of this episode is to discuss charts of three stocks with the lowest momentum score this week, and we will choose three from large caps, three from mid caps, and three from small caps. In case you are holding these stocks, I would say please reevaluate your thesis on holding these stocks. I'm not saying these stocks are not maybe valuable from a value perspective, perhaps, but we are seeing it from the momentum lens. And as a momentum investor, I would not touch these stocks with a barge pole. So how to read the momentum score? So it's a 0 to 100 score. The large cap stock that we'll first talk about is Adani Green. Here the momentum score is 1. The current drawdown is 69%. And this is one stock which not just now, but even in 2023 should have been out of your portfolio. Even if it came into your portfolio in 2024 beginning, it should have been out much earlier than now, before it hit 69%. So this is one of the lowest scores in the large cap space that we have. This should not be in your portfolio according to this. The second stock is Asian Paints. Of course, this is loved by a lot of folks. I have used Asian Paints in my house, so it's a fantastic product, but I don't like the stock. Not, at least not now. In future, if it starts to do well, maybe we will change our view once the momentum score is good. But right now, the momentum score is 2, 2 out 2 on 100, and we are at 34% current drawdown. I am absolutely not in love with this stock at all. Third one is Adani Power. Here also you can see there was a time when you were, in the trend phase, and now that has gone away. We're down 46% from the top. The momentum score is 3. This is one stock that is looking very, very weak from a momentum perspective. So these are three stocks from the large cap space. Just to give you an example, and without disclosing what we're talking about, in the last 12 months, these three stocks have given up 43% on Adani Green, 28% on Asian Paints, and 11% on Adani Power. The large cap space index itself is up 10%. So you can see the kind of uh, underperformance of these three versus the large cap space. And within the same space, there are stocks, and two stocks I've chosen, I've not named them, which are up 171% and 164%. So if you stayed with the strength in the last 12 months, you would have made much more money than losing money on these stocks. And that is the whole idea of choosing stocks with strength versus getting out of the weak stocks. So just to give you an example of how within the same space stocks are doing versus these stocks that we have chosen. Mid cap space, with mid cap stocks are the stocks which are in market cap 101 to 250th as per the SEBI ranking. Vodafone Idea is the weakest stock in our mid cap space. Current drawdown is 94%. Momentum score is not even 1. Essentially, there may have been a reason to buy it during this phase, but you would have gotten out here or here. But certainly, holding it down till here would not have been possible in any of the momentum portfolios. At least, value buyers have been buying this, and they can sit around for decades waiting for it. That is another story altogether. This is one stock that should not be in your portfolio as per us. IndusInd Bank, again, this is, even if I forget the momentum score, even chartically over the last 7 years, this is a horrible chart. I mean, kind of a 4-year flag-like formation that has happened and broken down. This is a very, very weak chart right now. Anyhow, coming back to momentum score is 1.3. Current drawdown is 52%. They should not be a part of any momentum portfolio. Third one is Adani Energy. This is drawdown of 82% from the top. So momentum score is 2. Again, one stock that you would not want to have in your portfolio in the momentum side. Comparison with others, these three stocks have lost anywhere between 36 to 54% in the last 12 months. The mid cap space is up 16% in the same time period. And two stocks from the mid cap space are up 238% and 126%. So this is the kind of, within the 150 stocks that we were talking about, there are stocks that are doing hundreds of percentage plus, and there are stocks which are going 36, 54% minus. It's obvious which stocks you want to choose going in this space. Small caps, 250 was first to 500th market cap, so 250 stocks in total. Small caps can also be beyond 500th rank, but we are taking the top 250 ranks. Fusion Finance, drawdown is 74%. Is the stock, I think, listed in 2022. Down 74%. This has no place in any of the portfolios. Even if you had it here, you would have gotten out somewhere in late 2023 or early 2024. Absolutely no reason to hold on to this for for your capital to erode like this. GVK, current drawdown is 95%, momentum score is 0.1. Another mid-cap stock that is likely, small cap stock that is likely to be removed from the top 500 places very soon. And this is essentially a falling knife. Whoever was trying to catch it here has lost even more money over a period of time. So this is again a no-no from a momentum perspective. Philatex Fashions is another stock which is down 75%, and this I think also listed on NSE recently, and this has just seen down moves. 0.7 rupees is the price now, and just something to not have in your portfolio. Again, these stocks are down 60-70% in the last 1 year. Small cap space is up 17%. Best small cap stocks have gone up as much as 238% and 126%. So you don't want to be having these stocks. You want to have better stocks in your portfolio. Even if you just compare it with the small cap index, that should have been the ideal return in your portfolio. But of course, we can't always get the ideal. Even if you are a little bit below that or a little bit above that, that would have been fine. But the whole point is that there are stocks out there which are doing very well in the small cap space, and there are small stocks in the small cap case which are not doing well. So why you should be on alert is holding on to weak stocks erodes your capital gradually. It also prevents you from riding a significantly better opportunity. It's like getting wedded to your stock. If you bought a stock at 100, now it is at 20. Now you are saying, from 20, where can it go? Well, it can go to 10, it can go to 1, and even a 1 rupee stock can go to 10 paisa and erode 90% of the remaining capital. So there is never a time where it is too late to sell. So whenever you find that there are stocks that are not meeting your criteria, just you need to be non-emotional about it and sell it. So how healthy is your portfolio? What percentage of your stocks are in strong momentum? What percentage of your stocks are in weak momentum? Is your portfolio overly concentrated? Is your portfolio well diversified? All these questions can get answered. You can go to our website, weekendinvesting.com, click on the portfolio momentum report, enter your stocks and the proportions, and you will get a PDF report in your email giving you all the answers to these queries. And it'll give you a complete picture of the momentum score of your portfolio, high versus low, and if there's any weightage skew in your portfolio. That's all I have from the Momentum Misfit episode. Please let us know how you like this new content. series. We will certainly look forward to your comments, and please do read the disclaimer. And I'll see you in the next one. Thanks. Bye.